We're back, Jay. We are back.
It's all over. The end is nigh.
We've got a fourth customer giving us 10 billion.
Somebody confirmed it sort of immediately after the call, is that it's OpenAI. You have a second source. That second source will be internal silicon.
Hello, everyone. I am Ben Beharon.
Greetings, programs. I'm Jay Goldberg.
So, I just want to make a grandiose statement. I love the semiconductor industry. I am so glad we're back, Jay. Like, dude, it's so great. I mean, everything about what's going on, from the drama to the unique technical innovations that's happening to broad competition to, I mean, I'm excited. I'm happy. We're back. We're back. Semiconductors. I know it's been a couple years, but man, I was like, for a while it was a bummer. Like, it was a real, the lost decade of semis was a bummer, but we're back.
You have caught me on the worst morning to have this conversation because I'm operating on like 8 hours of sleep over the last 4 days, and
I hit him.
Right, I've been having all kinds of thoughts about like, oh, it's all over. That's my mind has been all morning. It's all over. It's a bubble. It's all gonna fall apart. The end is nigh.
Oh, we're back, Jay. We are back. My enthusiasm is 1,000%. Jensen math enthusiasm. I gotta say, I thoroughly enjoy a hawk tan. Like a hawk tan moment is quite enjoyable. I love his candor. I love his tone. I love everything about what he says. And Broadcom had a decent quarter. I would say narrow beat, narrow raise, which I just want to make this point because it comes off similarly to last week. Not to say that, you know, Marvell could have done a lot better, but I do think Marvell or Broadcom stock was okay until Hawk started talking, and then it went up, but it was because of the
Right.
clear way he articulated their opportunity. And in this way, management knows they've been conservative when they pop out number forecasts like we've got a fourth customer giving us 10 billion. Like, that's legit. You could just mark that up, right? That's not maybe. And it might change the timeline, right? It might be over 2 quarters, but regardless, like, he does not make those kind of statements. You can trust that that's directionally correct. So it was just fascinating. Like, again, a master class in commentary that got everybody like, "Woo, we're excited." So yeah, but anyway, interesting dynamics going into today. Lots to unpack. So I'll let you just broadly start.
So yeah, so let me start with the numbers. Their revenue was a beat. Their EPS was a beat. They guided up. All of this is like single digit above expectations. So good number, not great, but good. No problems. And the stock is trading like a little bit down after hours. And then we get on a call and they go through their numbers and they read us the press release. And then Hawk says, but I also want to talk about, we have a new customer. We have a new customer for our custom ASIC business. And if you look at the numbers, their custom ASIC business is about, what I figure it's about 40% of revenue right now with 3 customers. So they're adding a fourth customer that could be meaningful. I mean, and he actually put numbers on it. He said it's $10 billion over, I think, a year or so. And we were guessing this, and I think the FT confirmed it, or Bloomberg, I can't remember who, somebody confirmed it sort of immediately after the call, was that it's OpenAI is that fourth customer. So from Broadcom's perspective, that's huge news. It's a big boost. And the stock is up 10% today on that news. So the results themselves were kind of okay, some good, some bad, but generally a little bit okay. But this was big news. This is meaningful news. And they had talked about they had these 3 customers, and like 6 months ago they had talked about they had another 3 customers in negotiations. This is the first of that second batch to actually go into production and go into revenue. No word on the other two. He kind of dodged the question on that, so maybe they never materialize, or maybe it's a long way out, or maybe it's next quarter. Who knows? But that was all, seen very favorably by the street. Very exciting for Broadcom. Right? Good news for Broadcom. So then if you look at trading today, it's interesting because AMD is down, right? And the idea is that AMD is probably trading off of the fact that if Broadcom is doing well, that means internal silicon, that makes AMD as an alternative to AMD as an alternative to NVIDIA less compelling. Right? If you're a hyperscaler, you don't want to be dependent on NVIDIA. You have a second source, and it looks like this year, next year, that second source will be internal silicon, and that means Broadcom. Right? Similarly, Marvell is off today because they said, "Oh, our ASIC business is very lumpy, and it's not going to be good now. It's going to be good in a few quarters." And here we have Broadcom saying, "What's lumpiness?" Right? We're going from strength to strength, and all right. I mean, so not a good look for Marvell either. So that's the facts of the call. Like, right? Pretty interesting stuff. Oh, and also not least on the call, he also said he's been engaged by the board to remain as CEO until 2030. And I think he was getting ready to retire, and he just saw this AI stuff coming. He's like, "No, I'm going to ride this. This looks like a lot of fun." Right? So another positive sign. I mean, the man is wealthy beyond all imagination. He doesn't need to work. He doesn't have to be CEO. He's sticking around because he thinks this will be enjoyable. I'm guessing.
I think the point about, Hawk basically going, "Hey, Marvell, I'll see your lumpiness and I'll raise you $10-20 billion of design wins" is interesting. I mean, there's been reports that this is OpenAI / maybe OpenAI plus SoftBank for Stargate, which could be possible. I saw a bunch of commentary like, well, first waffle off the grill of ASICs suck, so maybe this doesn't scale past that. I mean, I feel like the thing that you walk away with, like the reality of the ASICs, and actually this came out, which I think is an interesting point that that SemiAnalysis did, where they looked at future versions of, or what Trainium's doing, in this case Trainium 2, with Anthropic, and that Anthropic is kind of helping co-design future versions of Trainium with Amazon, is just how optimized you can make that chip for those specific workloads. I think there's a lot of sense to be made, right, for OpenAI to design an ASIC designed for their models. I think time and time again that proves out to be a very efficient way to get the compute you need. When, again, you even ask, OpenAI, and I think this is becoming super interesting of a point around ChatGPT, which was that a lot of its training was data bound. So essentially, like, how much can you just keep training on? We've already trained on the world's data, but also compute related, right? There was a compute bound to its ability. So compute is slowing OpenAI down. So if they're like, well, we can make ourselves an ASIC and go forward and solve some of this, that's an attractive proposition. So we'll see. We'll see where that goes. I think, I wouldn't write this off as like, well, they get it and, maybe it dies. I again, to the lumpiness point, I don't think Broadcom sees the level of lumpiness that Marvell does, especially when Marvell is up against, like we talked about last week, margin competition, competitors who will take less margin. And Broadcom's pretty much like, well, if that's what you want, we don't need you. We don't care about your business. Like, we add value or we don't. And they're adding a ton of value. So I think there's a lot of interesting dynamics to the way that ASICs play out. But I think what ends up happening, and this happens every quarter, right, which is why we keep coming back to this conversation, is Broadcom does kind of what they do. And if everybody's right that it's OpenAI, then the narrative becomes, well, is that worrisome for NVIDIA, right? Do ASICs start to really become encroach on the GPU market share. And we're just not there yet because this market is expanding at hundreds of billions of dollars a year in spends in compute and silicon, and ASICs will only get a portion of that. GPUs will still be, the vast majority, and we haven't seen the full performance per dollar per watt per square foot, which is another angle I'm adding to all of this analysis of things like Vera Rubin, Helios with AMD, next version of Helios for AMD, that I think will be competitive. But we can't write off, right? Everybody wants to own some part of their own silicon stack, right? The LLM guys, because that was right. Hawk basically said the people who want to do this own frontier models, and there's only a few of them, right? That's Google, that's OpenAI, that's Anthropic to a degree, others, right, et cetera, in China. Makes sense, right? That's who wants to build these things, and those happen to be the people fueling GPUs. So I get it. I'm not worried about GPUs in terms of their dollar share for the next 3 to 4 years, but it's completely logical that more of them want to own more of the stack, and we'll see how far they go, and we'll see how they compete with GPUs for these workloads.
So I think a lot of that is still undetermined, right? I think what's going to happen, I think what's going on in the market right now is a couple of the big hyperscalers, they're looking at their alternatives, right? They don't want to rely on NVIDIA, so what's choice number 2? Well, there's really 2 options. Do their own silicon with Broadcom or AMD. And for the moment, it looks like 2026 will be a year when a bunch of the big hyperscalers push hard on their own solutions. I don't think all of those will succeed, right? It's not easy to do this. There's lots of technical problems. There are a lot of strategic problems, software problems. I have no idea like who's going to succeed and who's not. But there's a dozen of these custom projects out there in the world today. Not all of them will succeed. And by the time they start to realize that, you'll have AMD with the MI400, MI500 on the market. And to your point, they'll have Helios, they'll have a rack scale integration, and it'll have some very impressive performance metrics versus NVIDIA. And so then, 2-3 years from now, it's a very different conversation, competitive dynamic, right? And so I think that's kind of how things are shaping up. But separate from that, I think what Broadcom's call really drove home to me was the fact that for the foreseeable future, the big contest, the big battle in AI compute will be between NVIDIA and Broadcom. Right? Those are the 2 players. That's the Coke and Pepsi for this market. And I won't say which is which because I don't know. But like that's the battle that's shaping up. And 3-4 years from now, maybe it shifts and AMD comes back, and like that's possible. But the future is very different. And having listened to NVIDIA's call last week and then having listened to Broadcom's call yesterday, it was remarkable to me how much the 2 CEOs talked about the same, sort of answered the same questions, and because they both have the ability to sort of go way off script from questions, and the things they talked about mirrored each other. And Jensen talked about, we have this complete solution. We do this this is all we do. We've hyper optimized every part of the solution. We have your networking, we have your compute, we have this, we have that, we have the whole thing. Just come from us. You don't have to buy it all, but like you really should, because it's much easier. We have the whole vertical integrated stack. And then you have Broadcom saying, you don't need all that. You don't need open is better, right? We have networking, we have compute, we have ASIC, we have IP, we have all these things. Come work with us. You can design exactly what you want. And like in particular, they both had this like competing narratives on networking, right? Which is a point we've been making a lot. Like networking is the real fight here. How do you tie all these processors together? There's a big fight about Ethernet and networking in general, but Ethernet in particular. And they're clearly responding to each other. They're having this debate in public. And for people who care about this, go back and read Hock Tan's comments yesterday on networking and Ethernet, because he makes a lot of really, really good points about Ethernet is just what people want to use. It's what we all know. Standard like this always wins,
Yep.
Which is very sharp contrast to sort of he makes some indirect jabs at like NVIDIA, NVLink, and all that. He's like, why do you have to cook up all this crazy proprietary stuff? Like, right? He's talking about NVIDIA, right? So, and I don't know who's going to win, right? But that's the battle. That's the fight. Is those two.
Yeah, and I don't want to dig into this too much, but I think, a lot of this, at least a lot of where we are today, if you're building a thesis, is to really form an opinion on the architectural advantages to something like a GPU, more general purpose ASIC that can have a ton of compute and will largely always outperform in performance per watt a custom ASIC, but it'll cost more, right? And so there's a cost analysis ratio that gets made out. And to your point about these don't all succeed, this is why when we articulate lumpiness different from cyclicality, whereas cyclicality has to do more with inventory, and lumpiness has more to do with this point that we don't know if ASICs go forward, right? You can't. I think we pointed this out last week. A merchant cannot decide to scale until they tape it out and see how it performs. And then they go, well, for my workloads, for my cost, is it worth it for me to spend as much money I'm going to spend to scale this, or should I just buy GPUs, right? What's my performance per dollar per watt per square foot analysis in that? And they don't know. They don't know till, like OpenAI, let's say this is OpenAI. They won't know till they tape it out, right? So maybe it scales, maybe it doesn't, right? Same with all the vendors. Other than Google, who's just super established, right? Largely for their workloads. That remains the thing. I did want to point out, though, I caught this in a Morgan Stanley note today that I thought was interesting. They had, in my opinion, the most sobering take, balanced take of everybody who wasn't just, glowing over Broadcom's earnings. This was the statement. We note that NVIDIA forecasts $7 billion of sequential growth, more than the entirety of the Avago quarterly AI revenue, with 3 to 4x the networking revenue. So in our opinion, some of Avago's share gain commentary falls flat. We aren't buying into 100% of the narrative here, but buying into 80% of it is still a very compelling story, given Broadcom's strong track record of execution. So again, right? Yeah, there is upside there. May not be as guaranteed. They are 100% going to keep engaging in these hyperscaler customers and LLM, frontier model providers in building said ASICs. The dollars are there. But over the arc of 5, 6, 7, 8 years, we don't know what kind of share, right, they take, and if they take more share than NVIDIA, whereas most people, I think, still have GPUs at least 70 to 80% of those dollars through 2030. In the most optimistic, I haven't seen anybody suggest it's going to be less than 60% that I think is credible. So anyway, points for that. I did wonder, are they at risk? Because it looks like the non-AI side of the business was kind of boring. Are they kind of at risk, like we talked about for Marvell, that it's just so heavily leaning on all the custom stuff? Like, it's not that they don't have other bad businesses, but nobody wants to talk about those. In fact, one of the calls was like, I'm sure everybody else is gonna, I think it was Harlan from JP Morgan, like, I think everybody else is gonna ask about AI. I want to ask about the rest of the business, because the rest of the business was not terribly exciting. And I just wonder, like, how much does that help or hurt sentiment when there's just a giant spotlight on really the custom side of the business?
So I was writing about Broadcom last night, and I was staring down the face of that question, and this is something that's been bugging me about a lot of names recently, which is everything is an AI story now. Right? You can make pipes, and it's an AI story. Right? It's a little bit daunting, and you sort of pencil in the math on what on what Broadcom is talking about for this new customer. They're over half their revenue. Not just semis revenue, but over half their revenue next year will come from custom, right? Which is it's an AI story, right? Now, of course, NVIDIA is 95% AI.
Yeah.
How and so that's one thing, and yeah, there's tremendous growth there, but let's also reflect on the fact that that spend is coming from maybe 10 companies, really 5, right? So, okay, that it, like I'm not saying it's all gonna fall apart tomorrow, but like people should be a little bit cautious here. Just be aware of the facts.
Yes, agreed. So okay, so yes, so the sentiment, like, great, be bullish, but it is hard, right, when that's the bulk of your business. And I'm not going to say the same, your same point about customer concentration exists for a lot of names, but these names are spending obscene amounts of money. I mean, I think Zuckerberg was at the White House today, saying something like he's going to spend $600 billion over the next 4 years. You're like, well, first, on what? But two, that's a lot of money. So you've got these kind of insane numbers being thrown out about spend. So those handful of customers are spending. But, right, to your first question, should the wheels ever come off? Should the semiconductor industry not be back anymore? How concerning, right, is that from a pullback spend standpoint when you're concentrated on those customers?
Yeah. I also want to take a moment just to give a shout out to Patrick McGee, who was our guest 6 months ago, because he wrote that book about Apple in China.
Yep.
And he pointed out that, like, Apple went to the Chinese government and said, hey, we're going to invest $500 billion in China. And the way they did that was they just added up everything, not just like investment, how we would think about it, like CapEx, but like all the money they're going to spend there directly, indirectly. And they said, here's $500 billion. And like that math is now percolated everywhere, because that's clearly where that's how I think White House math has to work for the tech companies. It's like, we're going to invest all this money, including money we're spending on T-shirts and dining room cafeterias. But so shout out to Patrick. It was a good book. Go read it. And to your point, it's very conscious. I mean, like, semis aren't going away. We just, at some point, gravity reasserts and things normalize. And
yeah. Well, and this goes to kind of another question about AMD, where they spoke. They had representatives speak at the City conference, and everybody wanted to pull on Lisa Su's public number that she sees GPU dollars being $500 billion in 2028. And the overarching theme, going back again to some of the commentary we had last week about NVIDIA, is everybody's just trying to get a handle on the size of this market, right? Because once you know the size, once you have an opinion and you can work out the size of the market, then you can start going, all right, well, I think so-and-so is going to get X amount of dollars. I think so-and-so. Okay, so fine. So that's why this exercise is relevant when somebody comes out and says it's going to be X, Y, and Z in said time frame, right? Again, going back to Hawks, right, when he said our SAM is between 60 and $90 billion, right? And then everybody's like, ooh, okay, like, that's a big number. Like, where are we at on that timeline? Are we getting close? Are you tracking? Because people want to size this market. So it's relevant. It's also, to your point, a lot of stuff is thrown into that number. Like, it's not just, oh, it's just GPUs, or, oh, it's just data center infrastructure. It's land, it's buildings, it's electricians, it's water, it's copper. I mean, it's just T-shirts. Everybody needs some swag. Like, it's everything.
Yeah, exactly. I'm at the point now, whenever I hear anybody talk about the total TAM for AI, in my mind, I flash back to Austin Powers, where it's Dr. Evil going, oh, $1 billion.
$1 billion. I guess, okay, let me ask you this, because you're from the finance side. Because I had this conversation with other investors. They were like, well, they're welcome to say those numbers. We just don't have to believe them. And I'm like, but they said the numbers. Like, I kind of feel like there should be some accountability to say it's going to be $1 trillion. And then if it's not $1 trillion, like, you should own I was wrong, or something. Like, you throw these numbers out. So I get that, but it's just wild to me that people just are like, because again, right, if Lisa's right, AMD's, it's not, I mean, that's total billion. If Lisa's right, NVIDIA is undervalued. So it's like, okay, but everybody just is like, well, we don't believe them. And you're okay with that. And I'm like, I kind of feel like there should be some accountability to throwing out kind of ridiculous numbers. But apparently it's just okay to be like, well, they're just crazy.
Yeah, I don't I don't have a response for that. You're right. There should be some accountability. I know that certainly for AMD and Lisa and her team, I am confident that they actually have a model, and it's probably a really good one. And they can quantify what they're saying, right? When it comes to some of the other CEOs who I will not name, I'm not convinced that they have really thought it through entirely what they're talking about. I'm sure Jensen's team has a model too that's pretty good, but they're look, the problem with all of this is nobody knows what the numerator is, right? We can sit there and talk all day long about how much money we're investing, but we don't know what the numerator of the ROI equation is, and so it's almost immaterial, right? I'm apparently I've been thinking about too much TV because I'm reminded there's an episode in HBO's Silicon Valley where Pied Piper is pitching their business plan and practicing it, and they say, and then our revenue is going to be this number, and their investor jumps up and says, no, don't put a number on it. When you put a number on it, then it becomes real, and people start thinking about it, right? And as long as we're using these sort of wild TAM numbers, which by the way is a very startup maneuver to use a TAM and not a revenue. As long as we're using these TAM numbers, it's all sort of like make believe land, right? Because what really is going to matter is revenue and profit, and really what your customers can generate on that. And nobody knows the answer to that yet. So
right, no,
let's just
I
keep it in the clouds.
Agree. I just think it's an interesting side note to be like, well, you can throw these numbers out, and everybody's just happy to be like, well, they could be crazy, so I'll do my own numbers. It just blows my mind. Okay, before we get to other things, I want to make sure Jay thesis time comes in, and then I have another addition as well. So I'll let you go first.
All right. So this is not so much a theory as this is my proposition, and this is sparked because Ian Cutress of Tech Potato had a tweet out this morning where he said, let's stop calling them GPUs, right? Blackwell is not a GPU, or like MI350 and MI350's graphics performance is as good as Vera Rubin's graphics performance. Like the 350's graphics performance today is just as good as NVIDIA's graphics performance 3 years from now because they're both zero, right? So I think we should stop calling them GPUs and accelerators. What we should talk about is MPUs, probably is the right word for it. AI processors, and there's custom and there's merchant. That's the distinction. It's all the same category, the same class of chips. They're AI accelerators, they're MPUs. NVIDIA makes merchant, Broadcom makes custom. But I don't want to call them GPUs anymore because they're not GPUs.
No, I agree. I think we've made some similar points to this when we went back a range of episodes ago on this. Is that they're and Jensen said this at the session I was in. I don't think you were there. You might have been in a different session at GTC. He was like, Blackwell doesn't play games. Like you ain't rendering Crisis on Blackwell. It's just that we don't know what to call them, right? Because he doesn't even want to be in the GPU camp anymore, which he so heavily sold in 2008, 2009, 2010. Yeah, he doesn't want to do that because again, these are, and architecturally, these are all very similar to a TPU, right? To a Trainium. Like it's got tensor cores, it's got matrix processing units, it can handle mapmole, like all this stuff, right? They're similar. They're not GPU. So I agree with you. I think it would be helpful if the industry could just basically say you got merchant ASICs and you got custom ASICs, but that vernacular has not caught on. nor is catching on, unfortunately. But we would like to point out on this podcast that we would like to formally refer these as merchant ASICs and custom ASICs. Which, though, I will say, where this gets then even more wonky, is what happens when we start seeing even more specialized workload ASICs over time coming from, like, yes, they're ASICs, and I guess still it's either custom or merchant, but they're less general purpose, I guess, gen on gen, if you will.
So, so I actually tried this conversation this morning with a reporter, and it did not land. The reporter was pretty lost when I was trying to make my point that there's custom and there's no GPUs.
I get it.
So yeah, we got some educating work to do.
Yeah,
but I just want to say, like, part of the problem I have is calling it an ASIC is like ASICs have been around forever, and they do like it's just special purpose chips, right? And NPU, I'm voting for NPU or AIPU.
No, oh man, let's not. I don't want to get in a naming exercise. Right. But
yeah,
I think you highlight the problem that we're just categorically saying a merchant, NVIDIA, AMD, maybe Intel, name your third party, is selling a AI accelerator, and then you have your first party accelerators from the Microsofts, the Amazons, right, etc. In fact, I did see a good tweet, and this leads me to a provocative statement I would like to offer. Richard Jark, who I like a lot, follow him on Twitter, very sound, sort of made the point is like, I really don't care who wins, GPUs, ASICs, etc., because you know who wins? TSMC. And the reality is that's true. Like, they are in a position where they're like, who's the default beneficiary of the growth of this semiconductors being back again, right? It's TSMC. And I think that's an absolute constant, only constrained by the fact that they are capacity constrained. Like, if TSMC had 8 more fabs, they'd be full. Like, I have no doubt about this. They just can't exactly go and build 8 more gigantic gigafabs, at the moment. But I did insinuate, and I told you this, and I put this on Twitter, that not next year, because this OpenAI / SoftBank chip, if that is what it is taped out on TSMC. But we know that SoftBank has a relationship with Intel, and if there is some element of this, I wonder if down the road some of this stuff does actually get made at Intel for OpenAI, for SoftBank, etc. And so, obviously not next year, but just teasing it out that if SoftBank's involved in that, and oh, by the way, SoftBank has investments in Intel Foundry, that could be interesting.
It's good to be hopeful.
I'm just putting a feeler out. I'm planting a seed. Yeah. In fact, I didn't want to have to talk about this because we always talk about Intel, but I do want to just mention something about Intel. So Dave Zissner, their CFO, was at Citi, I believe, yesterday, and made a point that I guess we should have known. Maybe we did know and I forgot. So let's just caveat that there is a financial structure to Foundry that allows someone to invest in Foundry and not necessarily Intel. Because the question came up, like, how inevitable is it about a split? And he was kind of like dancing around, but he was like, look, we don't just have the firewalls, we actually have a completely separate P&L and a financial structure in place that we could take money just for Foundry and isolate that as needed. And then he pointed out the government's caveat, right? If you sell more than 51%, they can take a larger stake. But everybody kind of read into that, like, it's not immediate. Foundry's got to stand on its own, but the framework to spin that out is conceptually there. Anyway, I just thought that was some interesting color.
Yeah, I think I saw that. I think you tweeted about it today, right? We did talk about this when the Intel deal with the government got announced. Was the government owns warrants to buy another 10% of the company if
at a discounted rate,
right at basically at 21 bucks if Intel sells down more than 51% of Intel Foundry.
right?
And I will say that I took heart in his comments because he finally acknowledged that they are open to taking money from potential customers.
Right.
Like,
For Foundry.
thank you.
Right.
For Foundry.
Yes.
Thank you.
Right.
Thank you. That, I mean, it's clear. I don't think they've been talking to those customers in that way before, and I think they are now. So that's heartening. I think if you look at that block of warrants the government has, though, I've seen it spun. I've seen it. It's usually presented as sort of forcing the company to hold. It's an incentive for the company to hold on to Foundry because it's dilutive if they sell Foundry, right? And so people took heart at that. They said, "Oh, yay! That means they're going to hold on to Foundry." I look at it differently. I look at it as an incentive for the government to encourage them to sell Foundry.
I think the same. As a matter of fact, I agree with you.
Right, and I know that the government doesn't have a board seat and has to vote with the company, but okay, if the president of the United States calls up the CEO of Intel and says you should sell Foundry to this person, to this company,
we got people, yeah,
you like how are they going to say no, right? And I'm not saying this president's going to do that, but any president has a pretty strong incentive to do that, right?
Yeah.
So I don't know how that plays out, but it's there, and yeah, it's encouraging. I mean, like, setting that all the speculation aside, what's encouraging is that they're talking to customers about taking investments from customers because that's what it's going to take for Intel to survive. As Foundry.
Exactly. Agreed. So yeah, I was optimistic actually on that commentary. It sounds like there's a reasonable path forward. And they may very well, right, be having those conversations. Okay, on to kind of some rando news that dropped this week. The information said that apparently Google's looking to plant TPUs somewhere, or maybe sell TPUs to customers. I don't know. This was being interpreted a number of ways, and of course, the ASIC people like, this is terrible for NVIDIA because TPUs are really great, and it's going to be a competitive pressure. So I have some thoughts. I'm curious how you interpreted this. I have a couple of different ideas on how it might be shaking up. So yeah, how did you interpret the news that Google might be shopping TPUs to outside of Google?
I think it's very unlikely that they become a chip vendor. Right, they're not going to go into competition directly with NVIDIA and Intel because that's a very complicated proposition. It's not as simple as it sounds. You can't just put them on eBay, right? But
I'd buy one.
I mean,
I have a chip. I have one small TPU chip up here on my thing.
I mean, maybe you could put it on Alibaba. That would probably be a pretty good way to do it. Never mind. I'll stop.
Yeah.
What I think's happening is Google is actually seeing real success in Google Cloud by selling TPU capacity on GCP, and that's important, right? Because many people, myself included, weren't sure how much outside adoption there would be of TPU, and that actually there seems to be some legs there, and I think that's really what's going on there. Beyond that, though, I think it's also possible that we get into one of these sovereign situations where some other country wants to build up its sovereign national AI capacity and licenses a deal with Google where Google will probably still run the data center, but technically the structure of it is they'd sell the TPUs to that third party.
Yeah.
Right. And whether it's a sovereign or some big company, I don't know, like. Or you could have a situation in which is a large enterprise, like oil companies, like sometimes do this with Amazon. They'll have internal AWS capacity, where AWS kind of does the software management layer, but it's on-prem at the oil company's facilities. There's a name for it. I forget what it is, but it's kind of like hybrid on-prem cloud. AWS has a role there, but technically ownership and final control is held by the corporate entity. So maybe we see something like that, but I don't see there being a G chip business.
Yeah,
coming to life.
I tend to agree. It hit me more like, again, and we're doing a bunch of capacity analysis of just how much space each hyperscaler has, plus how much they're renting or leasing from third parties. And Google's definitely right needs the space. So I agree. Part of our thinking was they want to plant these in hyperscalers because they need the capacity for TPU workloads that they don't have internally at GCP. And I think that makes some sense. That's also some of the easiest money, right, the neoclouds could make, right, if Google's either going to come up with a deal and or pay you to house them there because, again, they're out of space at GCP. So I think that makes more sense than agree with you selling. And the reason I say selling is hard is first and foremost, right, none of the other hyperscalers would buy those. So they're off the table. So then who's the customers? It's arguably maybe some on-prem enterprises, and I think that's a stretch because most of them are not, building on-prem scale-out rack solutions yet, and let alone optimizing all their workloads for TPUs. Like the lift and shift for that is not small. Right. And then the neoclouds essentially are just making money because everybody wants NVIDIA GPUs. So it's kind of like even they wouldn't buy those when their demand and their lead time is coming from mostly NVIDIA GPUs, to some degree AMD GPUs and the AMD neoclouds. But the reality is there's no like clamoring of demand from a third party, lots of third parties just broadly for TPUs. There might be someday, but I think Google's out of capacity. They run 90%, right, of the Google workloads on TPUs. So as third parties want them, they got to put that hardware somewhere, right, if they don't have it. So I think that's the right look, but a lot of people interpreted it like they're going to start selling, and NVIDIA's hosed because they're such ironwort is so great. It's like, sure, but in general, I'm with you. They're out of space. They need somewhere to house TPUs to meet up with demand, and they need to plant those in hyperscalers to do it.
Yeah.
Okay. I think that covers all our topics.
I think we got it all. And then
all right. Yes. Well, like I said, we started it off. Semis are back. Best industry in the world. We are excited for what next week brings, which there is the AI Infra Summit, which I'm told announcements are happening. So there should be some interesting things to talk about then. And never a dull week in semis. So thanks for listening, everybody. We will talk to you next week.
Thank you, everybody. Tell your friends. Click like and subscribe.